So in this video, I'm going to show you guys how to use Heikin-Ashi candles to plot out support and resistance, and some little tricks about using Heikin-Ashi candles to sort of identify key resistance areas and key support areas. So what we're going to do is we're going to chart a trading view, or whatever platform you're using, but whatever platform you're using needs to support Heikin-Ashi integration. So whatever you're doing, we have Gush here, but let's switch this to, let's just do ES. And I think I already have a bunch of stuff charted on ES. I do. So let's just get rid of everything. Okay. So now what we're going to do is we're going to use the daily time frame, but this will work on any larger time frame. I don't recommend doing smaller time frames, anything less than 1 hour, so like 30 minutes, 5 minutes. I don't recommend it, but you can absolutely do that. So we're going to go with the daily time frame because the daily time frame is very great to identifying key resistance and support areas. So we're going to flip over to the daily, and now what we're going to do is we're going to flip over to Heikin-Ashi. Okay, so here we go. We have our Heikin-Ashi candles. Now, if you remember in the previous video, this is a really important point when you're identifying, when you're applying this practice. Remember that the start of an uptrend is two flat bottom bullish candles, and then that would mark the start of your uptrend, or two flat top bearish candles. So if you look at the chart, we see this is the start of an uptrend, right? Because we have two flat bottom bullish candles. And this is the start of a downtrend because we have two flat top bearish candles, okay? So we have to remember that. That's really important. Okay. So with that said, the easiest and simplest way to identify key support and resistance levels using Heikin-Ashi is by just identifying the starts of uptrends and downtrends and plotting them out. So you see right here, we have two flat bottom bullish candles. So what you're going to do is you're going to take your trend line tool. I'm going to use the horizontal ray, and you're going to identify the start of this uptrend. So we're going to just put it right here. So there is one support. Let's just change it to 3. Let's just change it to a neutral color, white. Okay. All right. So there is one. This is not the start of a downtrend because you see we have one. Then this was not a flat top. So this is not, unfortunately, the start of a downtrend. We have the start of a downtrend here, though, so we can put one here. We have the start of an uptrend here, so we can put one here. We have the start of an uptrend here, so we can put one here. Start of a downtrend here. Here, here, and here. So let's see where that puts us right now. Okay, perfect. So let's go back a bit because we have a lot of empty space right here, right? So we want to make sure, we see that right here, this obviously was finding support somewhere, right? But we're not seeing where that is. So let's go back to see if we can find where that was. Here it might be. Let's put that there. And there it is. See? You see how that works? These are very, very, very effective candles to use. I'm not sure why more people don't use them. They're very good. So there you go. So now all of this makes sense, right? Look at this. We have a support here, you know, support, resistance. It's really fantastic, right? So then what we can do is we can open this up. We can switch back to normal candles, And now we have our support and resistance. And we can see it works fairly well. Now, it's always important when you're using support and resistance that it's not very precise, right? So you have to understand that support and resistance is more of a range. So if we break down below a certain level and then start coming back up, you have to understand that, you know, it's really not precise. And nothing is very precise. I use math and Heikin-Ashi, and math tends to be a little bit more precise, but nothing is like 100% perfect, right? So you have to always remember, like if we see here where it started to bounce, it did fall down. Generally, you would short to this resistance, or yeah, the support area here, but it did get sucked back up, and it really clearly found support on this area. So I know a lot of day traders will, when it breaks down from resistance, they'll short it, right? Which is generally how I operate when I day trade. But this is why I immediately put a trail, right? And this is why I tend to prefer day trading shares than options, because I can control my positions a little bit better when we break. So if we were to break down here, right, I would immediately jump in short. I would market sell short, and then I would, as soon as we are pushing down, I am setting my exit for flat, right? Because I don't know whether this is going to find support in the in this range, or whether it's going to actually flow down. And so as it starts to flow down, I'm going to be like, okay, so it is going for that level. I'm going to trail down my stop loss to some profit, right? So we're going to move down our stop loss to some profit. You see it bounces back up. It will trigger my stop in profit, right? It will found rejection here again at the at this resistance level, and then once it started showing that it was rejecting, I would reshort and do the same thing. So I would reshort here once it started finding rejection. As soon as we start coming down here, I'm setting my stop for flat. I'm going to get stopped at flat here, right? And then it's going to come back up. It's going to break over. So now we're just inversing. So we broke back over this support. I am going to market buy in long, aiming for this level here. As soon as this starts pushing up, I am going to set my stop up for flat. By the time we get to the second candle and I'm kind of really well in profit, I'm going to move up my stop so that I'm preserving profits. So then when it comes back down here, you get stopped out. Now this is my personal strategy, but because I am a high frequency trader, and the reason that I'm so aggressive with going in and out of positions is because eventually when you do this enough times, you're gonna hit the home run, right? So like, you know, all of this, it was a nightmare. Some you got stopped out for flat, some you made profit, but all of this you've made profit, right? Assuming you're trading shares and not options. If you traded options like that, you would be destroyed, honestly. But if you're trading shares like that, all of this fiddling around, I'm still out ahead, right? I'm out in profit. But then finally, once we broke back down and I short, well, look at, we finally make the tumble down to this resistance area, right? So some people are just super cavalier, they're super patient, and they will be like, no, I know this is coming down to this level, right? I am not like that, but to each their own, right? But either way, these support and resistance levels are very playable. Like you can day trade just with these support resistance levels using Heikin-Ashi candles, right? There's enough here in substance for you just to play the price action, okay? So another little trick that you can do with Heikin-Ashi candles is you can, on the daily, so if we go back to the daily, and we go back to our Heikin-Ashi candle setup, what we can see here is when we start a downtrend or an uptrend like this, so you see how right here, we started a downtrend. It's a flat top. What you can do is a really trick. It's a trick for quick reference. Is you can put in a support line at the close price. So here, okay. Now, the next day, whenever the price is above this close price, it's immediately a short. It's generally a short, right? Because you've just started a downtrend, okay? And so generally when you just start a downtrend or you're continuing a downtrend, anything over that close price, because how Heikin-Ashi calculates the close price is the average of everything, right? So it's the average of the high, the average of the low, the average of the close, and the average of the open. It's all average, and that's your close price for the day. So that is like a huge point of reference. It's a point of control, right? Because it's the average of all of the price action in that day put into one line. So when you plot this, anything that is over that average is generally going to get pulled down because you just started a downtrend. The sentiment here is clearly down, right? And it's the inverse for an uptrend. If you are in an uptrend here, you can do the exact same thing. So if we put a line here, anything below this is going to be a long, because either to the line or above the line, right? So anything below, so here, anything above this is going to be a short to the line or below the line generally, right? And so we can do an example with, so unfortunately this, actually let's do an example with here. So we had this was the start, well, it looked like it was going to start a downtrend, right? Obviously it didn't, but if it was March 8th and you saw this candle, well, what I would do is I would put a reference line right here. Okay, so this was March 8th. I'm just going to label it March 8th. And then if we flip to our daily candles or our regular candles and we go back to March 5th, which was March 8th, my bad. So the day after March 8th is March 9th. So if we look, March 9th, we opened here. Just zoom in. March 9th, we opened actually right above this line, right above this close price, and we got sucked down. We came back up, but you see what happened when we came back up? It immediately got pulled down here, back to this line and lower, okay? So it's a really, really helpful tip if you are using Heikin-Ashi candles. So again, all you're doing is you're identifying a very clear and concise bullish or bearish candle. So either flat top bearish candle or flat bottom bullish candle, and you're just drawing a reference line to the close price, okay? Now this does not work when you have this kind of consolidation pattern, okay? When you have this kind of consolidation pattern, what you need to do is you need to just focus on your support and resistance, so your actual starts of downtrends, because this isn't going to work. There's no conviction here, right? People don't know what they're doing here. They don't know if they're coming or going. So what you got to do is you got to just play the support and resistance, right? Once you have a very clear and decisive uptrend candle or downtrend candle, then as a trick, you just plot that line. Make sure when you're plotting that line as your reference line, you need to change the color. Do something to inform you that this is not a support and resistance line. This is just marking the previous close price, and anything above it is going to be a short, or anything below it is going to be a long, depending on whether it was a bullish or bearish candle, okay? And that is basically it. That is my tricks to Heikin-Ashi candles. Hopefully you found this helpful. Leave a comment below if you have any questions, and trade safe.